The stock market had a huge day yesterday as it extended the rally. What's it mean? It means one of three things. I'll tell you and then help you know what to do with that in just a moment. This is today's Next Wise Step video for today, Thursday. Thanks for being here. My name's Mike Bernard. I am the host of the Wise Money Show, also one of the CFPs here at Korhorn Financial Group. Hey, if you're new to this channel, welcome. Hit that subscribe button, turn on notifications, and give me that thumbs up. That helps people find this content all about helping you take your next wise step in your financial life. So this magnificent, unprecedented, one of the fastest in history's rebound that we've seen in the stock market for the past month continued yesterday in dramatic fashion. The stock market going up 2 to 3% depending on which index you're looking at. That's an enormous increase coming on the heels of an enormous rally that we've seen the past several weeks. Why? What's this mean and what do you need to do about it? Well, it means one of three things. The first, the headline said, well, we've got confirmation of great treatment for the coronavirus. That not a vaccine, not to avoid it, but if you get it, you can get this treatment and it's going to take your recovery time from 15 days down to 10, or I even heard some reports say it stops it in its tracks and you start getting better right away, sort of like a Tamiflu sort of situation. The stock market said, like the headline said, the stock market went up because of that. Well, the interesting thing, that drug manufacturer only went up 2% during the day. So I don't know, it's possible other companies had their shares as really advanced because there's some treatment out there. But you would think, I would logically think, if that was the leading reason, that the drug company would see an enormous advance higher than that of the market. Didn't see that, but that's one explanation. That could be why the stock market jumped so high yesterday. The second reason could just be, listen, we are past the worst of this. We're past the worst of this. States are starting to talk about how they will loosen their travel restrictions and so on. Businesses are talking about how they're going to get started again. This was just another step in the recovery and not just the rally. We are past the worst of this. It's going to continue marching higher, and this was just another leg of that. I hope that's the case. I think that's very, very possible as well. And so, great. That's the second potential answer. The third potential answer is actually the one that I think is most likely. And it's sort of pessimistic, and you should know I'm not a pessimistic person. But at the beginning of the day, we got the first reading of gross domestic product. You might not even know what that is. It's GDP. GDP is what you know it by, and that's basically the economic output for the first quarter. Was it positive or negative is how they report it. Did it expand from the prior quarter or did it contract? And two contractions in a row, so two shrinking quarters in a row defines a recession. Oftentimes we think recession is a mood, it's a state of mind, and you know what, in 2020 it might be all those things, but no, it is really, did we see two consecutive quarters in a row where the economy shrunk from the previous quarter? And we know that the coronavirus at least became a worldwide concern just in the past, since maybe the end of February, okay? And we saw the stock market start diving then, but businesses really didn't shut down. We didn't see people really change their behavior until maybe the 10th of March, something like that. And so up at least for 2 months, the economy was operating at full steam. And then maybe you had 2 weeks where it was, I don't know. And then you had 2 weeks of shutdown. And the GDP report came out that we shrunk at the fastest pace since 2008. It was not only that GDP shrunk, but it went down worse than economists expected and worse than any other period since 2008. That includes, so worse than 2009. And I think the stock market went up on that news because that suggests the Fed is going to continue to stimulate the economy. What I've told you all along, that bad news is sort of good news, because listen, the Fed will just take care of us. And part of the reason why I think that is, as soon as the GDP number was announced, the futures market skyrocketed. It jumped another leg up. And then later in the day, the Fed came out and said, hey, we're going to continue to do whatever it takes. We're keeping rates at zero for likely a long time period. We'll continue to do whatever it takes because we saw a sharp decline in economic activity. And to me, that concerns me about yesterday's market rise. That if the economy continues to sputter, or if there's any missteps by the Federal Reserve, we could see things plummet significantly. It just leads me to believe that this recovery is more Federal Reserve and stimulus fueled than it is economic fueled. And many recoveries start out that way, but they've got to then spur economic growth, and I don't know where that is. So what do you do about it? Okay, whichever one of those was reality, what do you do about it? Make sure you have an investment strategy. Do not be investing based on emotion. You should have, at least for us, we believe in a diversified mix of investments, low-cost index funds, but complemented with a momentum strategy. I told you our momentum strategy got completely out of the markets in February. It's only down a little bit, avoided all that drop. Well, things have come back so quickly it didn't trust it, but it started to feather some dollars back into the market. That account, our momentum strategy, is now positive for the year, and we're back in the market about 50% or so. That's unemotional, because my emotions are telling me, watch out, be careful, but you need to have an investment strategy, because the truth is, we're now into Thursday. We have no idea why the market did what it did yesterday in reality, and it almost is like it doesn't matter. Make sure you've got the right strategy with your investments. Contact your certified financial planner if you need one, especially someone that would take a second look at what your investment strategy is and make sure you get one that fits your financial goals. You can always contact our team. You can find us online at corehorn.com. That's Corehorn with a K. Or give us a call, 574-247-5898. All right, you're now ready to go out and take your next wise step in your financial life.